ASC 842 requires lessees to record nearly all leases on the balance sheet by recording a lease liability with a corresponding debit to the right of use or ROU asset. The lease liability is equal to the present value of the remaining lease payments. To determine this amount, we first need to determine the lease term on the commencement date. Then, we determine the total lease payments over the lease term. Finally, we discount those payments back to the commencement date using an appropriate discount rate. In this video, we'll focus on the discount rate. The discount rate is really important in applying ASC 842. Why? Because it's used to determine the lease classification, calculate the present value of the remaining lease payments, and measure a lessor's net investment in the lease for sales type and direct financing leases. But which rate should we use? The rate implicit in the lease or the incremental borrowing rate? Lessors are required to use the rate implicit in the lease as the discount rate. But what about lessees? ASC 842 states that a lessee should use the rate implicit in the lease unless that rate cannot be readily determined, in which case they would be required to use their incremental borrowing rate. Let's clear something up right now. A lessee will rarely use the rate implicit in the lease because it won't be readily determinable. Specifically, the lessee most likely will not know the amount of the lessor's initial direct costs, nor the lessor's estimate of the residual value of the underlying asset, both of which are needed to determine the rate implicit in the lease. Therefore, lessees will most likely use their incremental borrowing rate as the discount rate. A lessee's incremental borrowing rate is the rate of interest that a lessee would have to pay to borrow on a collateralized basis over a similar term, an amount equal to the lease payments in a similar economic environment. Some key components in that definition include the lessee borrowing an amount equal to the lease payments, over a similar term, on a collateralized basis, and in a similar economic environment. Interestingly, at first glance, coming up with the incremental borrowing rate seems like a slam dunk. However, in reality, it can prove to be quite challenging. Let me explain. Assume a lessee is lucky enough to have corporate debt outstanding. Can't they just use the borrowing rate associated with the debt? Probably not. Why? Because it is unlikely that the debt is for the same amount as the lease payments over a similar term, and if the debt was issued prior to the commencement date of the lease, in a similar economic environment. Even if a lessee were lucky enough to have all those things match, they likely still would not be able to use this rate because corporate debt is an unsecured borrowing. ASC 842 strictly requires use of a collateralized rate. Unfortunately, ASC 842 does not prescribe an approach for determining the incremental borrowing rate. Therefore, various approaches might be possible, including referencing the cost of borrowing for competing entities within the same industry with credit ratings similar to the lessee for a similar term and seniority. Obtaining a hypothetical quote from your bank. Although, if you're not actually taking out the loan, how many quotes will they provide and for how long? Or estimating an incremental borrowing rate using the rate of other borrowings or a reference rate adjusted for differences in payment terms, collateral, or other matters. Besides identifying embedded leases, determining an appropriate incremental borrowing rate has proved to be one of the most challenging aspects of applying ASC 842. Are you a private entity? Well, you're in luck. Lessees that are not public business entities are permitted to use a risk-free discount rate for the lease, determined using a comparable period to that of the lease term as an accounting policy election for all leases. We hope this video has helped you understand more about determining the discount rate in accordance with ASC 842. If you still have questions or want to see this guidance applied in practice, check out our 2-hour online e-learning course, Leases, Overview of ASC 842.